All right, how we doing, everybody? It's Chase. Nice to be back with you all. Today we'll do a little FOMC recap, and we'll talk about the macro a little bit. We're going to cover ES as usual, Bitcoin as usual, and then we will get into some things I spoke about over the past week. We'll probably get a little ranty, you know how it goes, a little discussion section. Let's get right into it. So, first thing I want to talk about, we'll get right into some alpha, right? Because the question I just keep getting the most is this question about liquidity and how to identify it. And there is a tweet I want to bring up real quick. This is the one, yes, okay. So I say, the majority of newcomers in trading do not account for experience or intuition playing a major role in success whatsoever. Technicals provide an amazing amount of guidance, but they are not the final hurdle to mastery. Experience, intuition, and feel are just as important. Okay, so like I was saying, don't get me wrong. I'm not claiming to have mastered trading or anything. If I had, then I'd be retired, right? But my point is that there's so many people that are new to the space that think that there's some type of technical rule that's going to say, oh yeah, liquidity's here. And then they always ask, oh well, why your level and why not my level? Guys, it's just the way it is sometimes. Like sometimes people have, they have experience on the chart, or they have intuition. And look, like I said, I'm not saying I'm LeBron James, but if you asked LeBron, if he's going down the court and he chose one route instead of the other, and you asked him, hey, why did you go this route? I don't know that he would have a technical explanation for it every single time. So there would probably be times where he would just say, that's just where I thought the best plan was. It's just my intuition. It's just my experience from being on the court for 10, 15 years, or however long he's been playing. It's the same thing with trading, right? It's the same thing with screen time. You put in a lot of screen time, you're going to get better at this stuff, okay? So, but let me show you some technical stuff in the meantime, right? Liquidity, down move, right? And you could flip this to an up move, right? Don't take it at face value. But say there's a down move and then there's consolidation, okay? Where is liquidity here? What you should be doing is you should say, okay, it's probably above these highs, because what's happening? People are shorting, and then they're shorting again, and then they're shorting again, and then they're shorting again, or they're being impulsive and they're trying to short the breakdown, okay? They're doing all that, and what are they doing? Where are they putting their stop? They're putting their stop like up here, or they're putting their stop above this high. So if you think, there's a major SR, say there's a major SR level like right here, and you're like, okay, this is going to go down, right? You think it's going to go down. But the way I'm going to trade it is I'm going to wait for all these shorters, all the people who shorted in here, we wait for them to get fucked, then we enter. What does that look like? That looks like a sweep of the liquidity. When you see me draw those X's, okay, that's the liquidity. So, oh boy, it's so annoying that you can't just draw cleanly with the paint tool. Anyway, sweep liquidity, right? So liquidity is now swept. You can just simply limit in here with a little bit of a stop higher, or if you're looking for more of a confirmation, again, you can go back to the A Gift From Me to You, a trading setup video. Sorry if you hear anything outside. It sounds like they're doing landscaping or some shit. Sorry about that. So if you look at that video, I talk about, basically looking for a break in the market structure. I'm not going to do it all here, but go watch that video, a break in the market structure, and having a bit more quote-unquote confirmation. So all these stops get ran, and then it goes down, okay? So when you're talking about liquidity, you want to say, hey, where are people going to get fucked before it moves down, okay? And if there's a leg down and it starts consolidating again, well, where's the liquidity now? It's here. Okay, so there's your liquidity. And if it moves up again, then it's here. Okay, so the liquidity is often going to be above consolidation. Okay, we can look at today's chart on ES. So before any of this price action happened, right, let's use our little rewind tool. Just put it to like here, okay? What I just drew you should look at this and say, okay, the liquidity is above this consolidation. We put the X here, okay? We put a little line at the top of the consolidation. You could have used this high, you could have used this, you could have used this. It's not a huge deal as long as you're getting mainly within the right area, okay? And then if we let it play out, oh, they changed the way this tool works. Now I don't know how to do it right. Anyway, we're just going to go all the way to real time. And if it plays out, look, there's your sweep. And then where would you target on the sweep? You would target liquidity. Okay, now this is where it gets a little sketch, because I can understand if someone would have said, oh, well, liquidity to liquidity. And this is where experience really comes in and intuition. I had moved down here to the 1 minute, and I saw these equal lows right here. See these equal lows? And I thought about stops below there and that people could maybe buy those stops. And that's where I took the profit. If you don't believe me or something, we can go straight to the tweet. And you could see that I posted real time at 27.75, right? That was my liquidity take profit. I actually took it at 27.28.25. You know why? Because sometimes you put in those equal lows. So if it was going to print equal lows, like the down candle here, and it wicked right here, sometimes it'll print equal lows to build up liquidity for later. Okay? So now when we go back and we look, 27, what was my level? The level I have marked is what I want to use. 27.28.25. We go back. 27.28.25. There's your sweep of liquidity, and there's the bounce. So live, I posted that level live, and it bounced off it perfectly. Could it have been used for a long? I suppose. Could it have gone lower on a different day? I think it could have, and tagged this liquidity. I do think that's possible. But with that said, often you want to take the profit of, least resistance, or the most likely profit. Okay, so I saw these equal lows and I said, okay, well, I think this is where I'd look to take profit. That's what I did. All right, let's move to other liquidity examples real quick while we're covering this liquidity. All right, so this was way last week. I had a Bitcoin long. I was looking to take profit at all these liquidity levels. Okay, you see this consolidation now. The reason I didn't only choose just the high is because Bitcoin has been very not volatile lately. We all know that. We can look at ES versus BTC, and we can see that the volatility has been very low. You could see ES moving over 5% in the past day or two, and Bitcoin had barely moved like 3% or so. I had printed to where it should be. I had drew to where it should be. But it's just not volatile, right? So Bitcoin hasn't been volatile for a little while, and that's why I had said, okay, I'll be taking profits at all these highs. But if we go back and we look at Bitcoin, we see that it's the same type of scenario, right? Now, it's not a down move this time, but the consolidation is the same, okay? It looks the same, guys. You just have to start identifying this pattern. This is a pattern of generation of liquidity. Now, if this did this, right? So if we had this high right here, and before we nuked, we went up and we did that, right? And we swept that, I no longer would have been looking for this sweep for take profits. I probably wouldn't even have gotten the trade at all. The whole reason for that long trade was to sweep this liquidity, okay? That's how it's set up. So you have to start thinking about, okay, what's already been ran, what still needs to be ran. If it's already been run, there's probably not a good trade there, etc., okay? So let's see. I talked about this. I can close this. Just want to get through most of these things. Again, sorry if you're hearing the leaf blower or some shit out there. Talked about this trade. I'll go more in depth on this trade actually, but don't do it just yet. Okay, we talked about the volatility. Real quick. Now we'll get into that later. Okay, so let's get into some local price action here. Let's just clear off the chart. Okay, so we'll talk about the trade fund today. We'll get into local PA. So first thing I did today as I opened the chart, typically I start in the daily time frame, right? But coming from yesterday, in my opinion, now we can get into some of the FOMC stuff as well. But coming from yesterday, I was bearish on a daily time frame, right? So I'm moving down instantly and I'm thinking, okay, this is a big move down here and I want to look for a short. Okay, you could throw a fib on it. I personally didn't in the beginning. I just spotted the liquidity and I was like, okay, well, we're down here, right? Price was down here and it's moving up quickly. What it's probably going to do is it's probably going to take liquidity and then it's going to dump. Okay, that was that setup. But also what you could have done if you're not that good at spotting the level is you could simply take this sort of this leg right here, right? This is sort of like a leg of price action, and just fib it. Look for the 618, look for the 705, and there's your perfect rejection for a short, okay? And then you combine that with the liquidity. It was a very simple trade, okay? So where do I think we're going from here? We'll get into that. Okay, so just marking this out. Honestly, there's nothing more. I'm not saying this for you guys anymore. There's nothing more I hate than the sound of the fucking leaf blower. I can't stand it. It kills me. I know. I feel like that's a common thing. Like everybody hates it. It's so annoying. All right. So you have a low. You have a high. You sweep the low. You sort of break out on the high here, but sort of like a huge deviation, right? I personally thought we were going to either this liquidity or this liquidity, and I'm pretty surprised that we didn't. I think what really just turned the market around pretty quickly and created an inability for us to move up, because I thought we were going to move up here, right? I saw these relatively equal highs right here combined with these highs over here, and I thought that this was all ripe for liquidity. This whole area right here, ripe in my opinion, right? And I think what happened was Powell really just came out and he really reinforced his, his hawkish statements, which hawkish is essentially bearish, right? And then let's talk about FOMC. Let me take a sip of water. So going into FOMC, you should always have something in mind. You should be thinking, okay, what is the data that the public doesn't know, right? Because 75 BPS, like it's priced in. Powell's trying to get to this, certain rate. He's trying to get inflation back down to 2%. All that stuff is priced in. But what wasn't priced in was when he came out and said things like, let me think of what's some of the things that he said. That he said that he would rather over tighten than under tighten because they can use their tools to support the economy if they over tighten. But if inflation becomes entrenched, then essentially we're fucked. What he was saying. So right when he said that, the market immediately started nuking, and then he went on to say further things like he believes that the ultimate terminal rate or the highest rate that we need to get to is going to be higher than what he had originally forecasted in previous meetings. Okay, and then there was a third one too that I don't remember exactly what it was. You can go and look at you can go look at Macro Alf on Twitter, ALF. He posted some good stuff about this. But I was watching it live and posting about it live. Those were the two I remember, and then there was a third one as well. But yeah, I was really interested in getting short right in here and pretty much holding that short to this low. Just didn't get it. I forget where I had... let's see if I can pull this, find this real quick. You'll see that I had talked about it on before FOMC even started. Where was it? Right here. Okay, so I had drew this low. Okay, we're on the 4 hour on the S&P. You see this low I have drawn out at 3736.5. Okay, we'll go to the 4 hour. 3736.5. There it is. Swept. Okay, all I wanted was a sweep of this liquidity, and I was going to trade it to that liquidity, and that was going to be a typical liquidity to liquidity trade. It's one of the things you guys hear me talk about the most is liquidity to liquidity. And don't get me wrong, guys, right? Like, liquidity is not the end all 24/7, because there's many times that you guys have heard me say, this piece of shit can't even run the fucking liquidity, it's so weak. You've heard me say that. So it's not always going to be liquidity to liquidity, but that's typically what I'm looking for. I'm looking for extremes, especially on a day like FOMC, right? Like I was looking for an extreme, right? I was looking for either a sweep of the low and a bounce, or I was looking for a sweep of the high and a nuke, okay? And specifically what I really wanted was a sweep of the high and the nuke because I'm still overall macro bearish. So I like those setups. I tend to appreciate those setups more than I do the long setups. Okay, so we could talk about Bitcoin a little bit. Oh, well, we were in the middle of S&P analysis. Let's just keep that going. Okay, so we get back to the daily. We like to start in the daily, you know how I do. Yeah, I guess you could paint this as a deviation, but I really did. I thought it was going to go to this liquidity, or I thought it was going to go to this liquidity. And maybe these are still possible. I mean, if we fib this whole leg, let's see where we're at the moment. So we just tagged the equilibrium, essentially. I mean, a sweep of this low would be interesting. I tend to think this low sticks for a little while. This was the 200 moving average bounce and a huge liquidity run. I do tend to think this sticks for a little while. Maybe we do continue to break down and retest the 200 again. And maybe when we retest that 200, you know, somewhere along the line, somewhere in here, right? Maybe we retest that 200 again, and that's when we go and get into here. And I think once we get into here, and, you know, all this liquidity above here, right? Okay, you guys starting to understand? That is when perhaps maybe we reject and go for the new lows. But again, guys, most of the time I'm trading on a day-to-day basis. So I'm giving you guys these sort of quote-unquote blueprints, and we look back on them and see what worked and what didn't work. But for the most part, you know, it's sort of day-to-day analysis, and we take it one step at a time. So we can zoom in now and just take a look at what we're seeing on low time frame. Let's get rid of the MA. It's unreal, man. I make a video once a week, and this guy's got to blow the fucking leaf blower. Can't concentrate for shit. Okay. Let's mark out that high again. We had resistance. We broke through. Daily close above. Our daily close basically on it. Pushed through here. And then, interestingly enough, this level has provided like little... It's provided like little... What's the word I'm looking for? It just hasn't really stopped or saved price, right? It's sort of like it's becoming a bit meaningless. Price is sort of just chopping it, interestingly enough. It was providing some value back here. Like we could see the resistances, the push through, we could see the support tap to bounce. But then once it gets to here, it's just been getting chopped up. So typically when a level starts to really get chopped up, I usually just get rid of it, honestly. And just looking at this, I mean, we were in an uptrend, right? Low, high, higher low, higher 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 high, lower low. Okay, so break in market structure, right? If you guys haven't understood that one, that's in, again, a gift from me to you, a trading setup. So what we have here actually is we had a sweep of liquidity, low time frame here, right? Unfortunately, we didn't get the full sweep that we wanted. It would have been beautiful, but hey, sometimes you just don't get it. I really, like I said, I thought we were going to get it during FOMC. That was my short, just didn't get it. It happens, you know, shit happens. But anyway, so we have a high, we have a low, we have a higher high, and then we break the previous high's low here. Okay, break an MS. I believe this was Monday's low at that point. Yeah, I believe this was Monday's low. Yeah, Monday. Okay, so Monday's low was here. We came down into Monday's low. Chop it up a little bit. Just show you guys another example of liquidity here. Trade that I took. Where was it? Yeah, it was on Tuesday's session. So, on Tuesday's session, and I hope these are helpful, right? I understand that this is sort of like hindsight trading, but I do think that the examples I'm providing to you are somewhat helpful and can sort of try to give you footing as to how to look for liquidity, which seems to be like the most commonly asked question. So I saw a big breakdown move, and I saw a bit of a bear flag here, right? And I thought continuation to the downside. Target wasn't anything crazy, right? I had seen this basically support level down here. Why is this a support level, right? Well, we had a support here. We have a big leg up from there, right? It was never retested, okay? When a level is not retested, that typically means that it's still support, okay? So origin of impulse up here. You get one tiny little retest. So below there, in my opinion, is liquidity into support, okay? So what was the trade? Well, I saw this consolidating upwards, but I didn't think that we were going to simply fill this. That didn't make sense to me, especially after just running that liquidity, right? So again, look at the context here. The context is bearish. We had ran liquidity, huge down move, sort of a bear flag here, consolidation, right? But if you look at this, look at what happens right here. This is what I really want you to focus in on, and we're getting a little deeper here than we usually do. Sort of see this little fake out right here. Hold on, let me adjust this line so we're really accurate here. So if we drew a trend line, right, and we don't often use the trend lines, but occasionally they can help for a consolidation, right? What a lot of people probably saw here is they probably saw an ascending triangle thinking it was going to break upwards. What I saw was the more zoomed out context of a liquidity sweep to down move to consolidation, and I'm thinking, okay, this is going to move down more. Where is my target? My target is simply liquidity into the previous demand / support level, whatever you want to say. But how do we get there? Well, I know we're not going to get there by just like dropping out of an ascending triangle. That's not how it works. Okay, what we're going to do is we're going to fuck people first. Because you can't, remember that drawing I did in the beginning? Remember how I said they're shorting, or they're shorting the breakdown, they put their stops above here. Okay, now let's look at that. They're shorting the breakdown, they're shorting the breakdown, they're shorting the breakdown, they're shorting the breakdown. They're shorting, right? Shorting. And where are they putting their stops? Well, you'd have two places here. You could say that the stops could be here. That was one of my ideas. I had half of my position up here. I actually only got a half fill. And then the other part where I thought was these equal highs. Okay, so remember those equal lows I showed you guys today? These equal levels often get ran. So I said, okay, this is going to break down, but what I need to wait for first is for this liquidity to be swept. Okay, so I got a liquidity sweep here. I had my other half of my position here, had my stop here. Why? Because I just didn't think that it was going to fill this area right here. I didn't think, the context is bearish, right? So if the context is bearish, then we're not going to fill an up move like this. That means it shouldn't get above here. This should serve as resistance. Even if it was to push into here, this sort of like resistance level right here, this block, should have rejected right there and we moved down. Okay, so I got a half fill above these equal highs right here, played that down to liquidity right there. Okay, oh man, this is going to be a long video. Yeah, we might need to start pushing this somehow. All right, let's see. I don't know, I get so many questions about like the liquidity stuff. It's everywhere. I understand why people, I don't use like the order flow charts. I don't use any like liquidity levels from any websites or anything. I just use my eyes. Okay, I'm genuine when I say that. It's just experience and intuition and some technical ability, I suppose. Fibbing it out, looking for where the consolidation is, and then playing that trend essentially. So yeah, I mean, as we were talking, we said we had Monday's low, we had a break of market structure, we broke down, we swept liquidity here, we're now closing above liquidity. It does look like we'll want to work into here eventually. I do think that makes sense. We will want to watch out for a liquidity sweep of this level, 3782. Let's go on to the lower time frame and see if there's anything. Yeah, so we can watch for a liquidity sweep of up here, but at the same time, once these you start to work into these inefficiencies, they do often fill. Someone was asking me what an inefficiency is. Basically, it's just like, it's basically an area where not a lot of people got to participate. And so you can look at it in two ways. Either people want to join in on the fun, right? So like FOMC, this is a good example. FOMC, the data comes out. None of the normal retail plebs are able to get in fast enough, right? But they want to join the party. So this was the super fast move, right here. This is the super fast move. They want to join the party. When it comes into here, it sweeps liquidity, it gets into the inefficiency, and that's when it typically rejects as the retail joins the party, the smart money of retail, right? Another way to look at it, though, is that sometimes these quick moves will be pushed up by, a big entity or a big player or something. This is more often in crypto, especially you see this a lot with Bitcoin lately. And what happens is that once you push into an inefficiency, you just start to fill it all the way and you just go back down. Why? Because they distribute it all in here. So they bought here, they distributed here, and they filled it. It just goes all the way back down. They remove their buy walls, whatever you want to say, it goes right back down. Okay, so that's two ways to look at it. We just got to keep moving here. We watch for the fill. We watch this low. ES is all about liquidity, guys, okay? Watch the liquidity levels. We watch here. We watch this low. And I showed you that zoomed out view of potentially using the 200 moving average to try to help you there as well. Okay, moving forward. Okay, leaf blower right outside my window again. Okay, we have these lows here on Bitcoin. We have this high right here. Bitcoin has been in a downtrend here. The only break in market structure we had was this FOMC high, and it's really not. When it comes to these FOMC moves, guys, I think you should take the wicks often with a grain of salt. I don't necessarily view this as a market trend shift. Alright, anyway, so this guy won't stop blowing the fucking leaves in a circle, so it is what it is. Just gotta go through, and I'm sorry, it is what it is. Nothing I can do about it. I really don't see this as a market trend shift. What I'm still seeing is just lower lows, continuing to make lower lows and make lower highs along the way outside of this FOMC move, okay? So I am short on Bitcoin from in here-ish, 580 or something, right around here. If it comes back up to my break even, I'll probably just exit break even. I will hold and be okay with a liquidity sweep and looking for target here. If it was to come up to here, once again, you can use the a gift from me to you, a trading setup video, and you can look for a liquidity sweep and you could look for an entry on a market structure break. That's possible. You could align your stop with mine and look for it to go towards liquidity. But in general, lately, I really haven't been trading BTC much. I just, sometimes I post about BTC because I know my community likes to hear about BTC. And then usually when I post about BTC and I'm like, oh wow, well look, Bitcoin actually has something really clean to offer here. That's great. I'm going to take a trade on Bitcoin. I almost always regret it. I would have rather taken a trade on ES. You know why? Because ES, if I just shorted it randomly, sort of as I did with Bitcoin during FOMC, ES went to liquidity, and Bitcoin has still not gone to liquidity. It's just, I don't know, man. Bitcoin just doesn't. It's just nobody cares, honestly. If I had to put it into words, I just don't think anyone cares. This thing just does nothing. It's a fucking store of value. So it is what it is. And I get, people say, oh, well, you can trade all these alts and stuff, and yeah, that's great. But they're way less reliable. I'll show you what I mean. So people were talking about trading Doge and how Doge is so volatile. Yes, that's true. But let's look at the Doge charts. Well, on this chart on Doge, you have a 6.3% sweep of liquidity. On this chart, you have a 0.84 sweep of liquidity. On this chart, you don't even sweep liquidity. On this chart, you have a 2% sweep of liquidity. So how is it that I'm supposed to have the precision that ES offers me on some dog shit like this that, is obscure? And let's not even talk about how, okay, well, you need to predict what fucking coin is going to move at what time. And then not only that, but then you have 8 different exchanges all giving you 8 different prices. The setup, there is no good setup. They're all different. So that's why I'm a big fan of trading ES. You guys know this. If you're interested in trading ES, as always, these videos are sponsored by Prime XBT. You can go over to the Everything About ES video. Go to around 4 minutes, and I go through everything with ES, and you could see I show you how to use the platform. It's very simple with USDT collateral or USDC or Bitcoin, and you can basically set your stops, your take profits, and here's like $100 worth of loss, $100 worth of profit. Very simple, okay? Go check them out. These are the guys who sponsor these videos. If you want me to keep creating these videos, as I always say, your signups and your deposits onto the website mean a lot. That's what they keep me employed for. Simple as that. I'm not going to sit here and bullshit you and tell you, oh, it's this very best exchange. And well, I think it's a good exchange, but my point is I'm always going to spit it to you guys real. So if you want me to keep doing these videos, you sign up, you make a deposit. That helps me out a lot. Okay. Yeah, so that's it for BTC, right? Think it could be a potential sweep here. Still see it going towards this liquidity. What I would note with BTC is that more than ever, BTC does not like to give clean sweeps and bounces. I mean, it's always possible, right? And you could look for it once again using an entry technique. But a lot of the time when BTC, like a lot of people will be like, oh, I'm gonna long the sweep, and then eventually it just like it comes a little bit back above. Well, you can watch for this. This is like very stereotypical of BTC. It'll sweep, it'll come back above, it'll get to like here, right? Like everyone will be, holy fucking shit. It'll get right above the level, right? And then it'll typically like reject on people's euphoria, and it'll chop the level a bit, and then it'll flip the liquidity level to resistance and break down and simply fill the whole entire move. Okay, so that's something to watch for. Okay, we talked about this. I mean, this was the FOMC. I talked about BTC going down to sweep the liquidity. We're mostly headed down towards it. Okay, we'll see how that plays out. ES, talked about this, getting down towards this liquidity. Really wanted to see this sweep first. Didn't get the sweep, but eventually headed down towards this liquidity. Wish I would have played this instead of BTC. Crypto trades like dog shit. Crypto not volatile on this tweet. Doge. I mean, if you're just some type of degenerate who just wants to buy and hold and you just want big percentage moves, then that's awesome. And that's fine, but that's not really what a systematic trader would do. If you're a systematic trader, you do not like this. You don't like seeing 7% here, 1% here, no sweep here, 2% here. This is dog shit, okay? That's dog shit. Everything about ES, if you want to learn more about trading ES, go to this video that I have. You can watch this video. It talks all about exchanges, brokers, everything about ES. What is it? How to trade it, where to trade it, the differences between ES and crypto, margin requirements, everything, okay? And if you just want the very simple version of it, you can use Prime and you can just set your take profits and stops, etc. Talked about this. Okay, and we'll just do a quick rant at the end here. Not that this video wasn't already filled with enough anger. Hope it sticks that leaf blower up his ass. So a good rule of thumb in crypto: if you're new and didn't truly earn the return, or it feels good or it feels too good to be true, take fucking profit. So many examples: random alts doing 20x, airdrops, any NFTs, art gobblers at the moment, I think it's called. View it as a capital influx, as a jump start. View that capital influx as a jump start and go next with more strategy. So basically what I'm saying here is a lot of people come into crypto. We wait for him to go by. A lot of people come into crypto, they get lucky, right? They buy some alt, overnight it goes 30x. All of a sudden their $200 is worth $8,000 or something. I'm not doing the math. But all of a sudden they run into some huge amount of money, right? Life-changing money for people who have zero in the bank. And a lot of these people think, oh, well, what if it's going to keep going higher? Well, here's what I can tell you. It might go higher, but it might not, right? And I know for a fact that you're not going to time the top. Maybe like 1% of the people are going to time the top. So take some profit, don't put, because if you don't take any profit, then you have all your bags, or you have all your chips in one bag, right? That's not what you want. So take profit on that and use it as capital to be more strategical in the future. And you really know this, you should have this feeling like when you didn't earn something, right? Like earlier in crypto, when I would buy an alt, and in 2 days, it would be up 30 times, and say, holy fucking shit, this is like crazy. Like all of a sudden my 0.1 BTC turned into 3 BTC or something. Like I would immediately take profit. I mean, this is when BTC was at like 6K or something, 5K, who knows. But I would immediately take profit, right? Like it's just crazy. So what I think is that people need to recognize that you got lucky, you didn't earn it, take some profit, and I don't care what you use it on. Use it on your car payment, use it on your house payment, put it towards your kids' college. I don't know what you want to do, right? And whatever, it doesn't matter. But don't think that you're some type of a fucking genius for getting a lucky mint on some, on a picture, and you turned $1,000 into $20,000, or you turned $0 into $15,000 if it's an airdrop or whatever it is. I don't know how much the mint was, but you got lucky and you didn't earn it. Okay, so take the profit, and it's as simple as that. And talking about just the macro in general, last thing I want to say, because this is just getting ridiculous with the whole thing. Again, I apologize about the blower and whatnot. Last thing I want to say, I saw during once FOMC was over yesterday, and people were talking about like bears potentially getting blown out, or how the macro was bullish or something. I go to reply, and the person has their replies disabled to only people that they follow or whatever. So I'm like, well, what the fuck is going on here? Basically what people are doing. And this is an auto unfollow, right? So you need to look at all these people and, either unfollow, block, whatever you want to do, because these are straight scammers. Trying to farm engagement, just claiming that the macro is bullish without any understanding of probably not even watching FOMC, just literally farming engagement. Turn off replies so only yes men can comment back to them and reinforce their dog shit. And then you scroll down on their feed, and what are they doing? Oh, of course, they're retweeting like random fucking NFT projects that are all going to zero. So basically just selling out their followers and trying to farm engagement all day long. Complete, just dog shit accounts, unfollow, block, etc. Yeah, I think that's about it. Hope today's video was insightful. As always, thank you very much. I appreciate any of your comments, retweets, feedback. All that stuff helps. Thank you very much, and I will catch you next week. Peace out.